So, and it's really interesting. You finished on the word there, trust. Michael, from your perspective, my uncle taught me at a very young age that how do you manage risk, and what he said to me is work out what your worst case scenario is, and if you can manage that, then everything else is upside. And to some extent, Richard, you've actually said that about the night out and what would you be prepared to lose. But what are some of the risks, Michael, you see in this space, both for the industry and for investors that they should kind of keep their eyes open about?
Sure. Well, there have been a number of times when external events have disrupted the overall adoption curve and the price curve, which if you just look at the charts, which, David had some great ones, but you can also go to blockchain.com, which has a whole selection of charts. This is a company that does wallets, but it also it has a lot of great information around adoption and adoption curves and cycles. And the supply and demand is disrupted, and that's why I'm so busy these days with my PR firm, and we've worked with over 150 blockchain companies and over 60 ICOs, is that perception is reality in this space. And in many fast-growing, emotionally driven markets, there's a rush for the entrance and there's a rush for the exits. And this happened with the internet, with the dot-com mania. It happened with the Roaring '20s. I forget if it was J.P. Morgan or it was one of the early tycoons that said, when my shoe shine boy started giving me stock tips, I sold everything. And, yesterday, he wasn't giving me tips. He was just telling me about what he had learned about. My Uber driver, when I was speaking to my fellow passenger coming from the Token Summit about different cryptocurrency trends, he turned around and said, have you heard about the Power token? And apparently, I hadn't actually. Venezuela is now going to be supplementing its real failing fiat money with a token that is going to be backed by its oil and gas reserves, which is phenomenal. Of course, there's a lot of people who are skeptics who say, yeah, right, go and try to collect those oil and gas reserves and it'll be centralized and probably unauditable. But between that and what Gabriel Abed is doing to get governments onto the blockchain, it's a step toward moving away from the world that has been since the creation of the Federal Reserve in the early part of the 1900s, a world that has not been asset backed. And prior to that, the rest of civilization, we valued gold and feathers and coins and paper money were just simply bearer notes to exchange for those assets of gold and silver. And when we went off the gold standard, and then when we started doing things like quantitative easing, it made hard assets more valuable, such as gold and silver. And there's a number of reasons why gold and silver isn't much higher than it is now. That has to do with funds that can, kind of leverage and hypothecate and play games like that. But with Bitcoin as a commodity, and it'll be interesting to see what happens now that the Chicago Board of Options and the Chicago Mercantile Exchange are going to be allowing cautiously options that anybody with a normal Charles Schwab or whatever brokerage account, as well as other institutional money managers who heretofore had not been able to buy Bitcoin, are going to be able to go and buy all sorts of options on Bitcoin through a very trusted Wall Street institution, or global. Actually, they're based in London, even though there's a Chicago, they set the price in London. So we're at the point now where we're just getting this kind of massive mainstreaming. But when the boom happens, a bust happens. But the nice thing with Bitcoin is that in the traditional stock market bust, like the dot-coms, you had venture capital firms and boards that would fire the CEO of promising companies. They would liquidate it down to be able to just get something out of it. And we don't have that with cryptocurrency. Ethereum went through a crisis last year where they rolled back their blockchain to eliminate a $60 million theft that happened from a token called the DAO. If that was a venture-backed company, they would have fired Vitalik. They would have probably shut down Ethereum. Instead, the market reacted by taking Ethereum that started at 30 cents in its crowd sale, had gone up to about $30. It was roaring at that time, and it went down to like $6, and it stayed that way for a while. But believers said, you know what? I believe in this, and I'm going to buy more at $6, and today it's $450. So the community being able to go and have governance instead of its speculative board of investors who often are misaligned in their incentives with the holders of the token, because again, utility tokens are not securities. They're assets, and they're a community that holds these assets, and they're able to vote. So even though there's usually a reaction because the quote unquote dumb money, the masses, they typically buy at the top and they panic sell at the bottom. I mean, sorry, they reverse. They sell it. They buy at the top and then they panic sell at the bottom. The smart people basically go in and look at the long-term trends. Don't day trade, because you could have lost a lot of money on fees if you day traded for the half a year, oftentimes where the price was just flat and stable and boring and normal. And then you have these parabolic moves, but every time there's been a parabolic move, the baseline of what comes after is higher than you started before. So it's very possible that at 12,000, we could be sitting around 4,000 or 5,000 next year, but it's still a lot higher than the 1,000 in January, and would then build steam up for the next move, which could be to 25,000.